Here now to talk more about today's market rally, Patricia Edwards. She's Managing Director of Investments at U.S. Bank Wealth Management. Patty, nice to have you back with us.
Nice to be here. Thank you.
Let me begin by just asking you that we know that investors are always worried about something. And, all of a sudden today we get this big rally. What changed? I mean, what's driving this enthusiasm? And will the rally continue?
I think there's a lot that went into today's numbers. First of all, you had successful closing of the games with no issues over in Sochi. And I think that was not to be taken lightly. On top of that, you got a little bit of a resolve out of the Ukraine. Nothing is absolutely clear, but there is actually some movement and things seem to be calming down. That helps also. Then you add in there some mergers and acquisitions that are really helping to get the engines running here in the U.S. And earnings have been pretty good. All of those taken together made for a very nice day today.
But what's wrong with the logic that says if we believe that the Fed's easy money policy of the last few years has fueled a great deal of the rally we've seen in the stock market, when they start to remove that easy money policy, why don't we see a decline in the stock market? That's not happening yet.
No, it's not happening yet, and I think part of the reason for that is that there has been so much stimulus over the past few years. And so we're starting to ease off on the throttle, but our foot's still on the gas pedal. There's still money going into the economy. It's just not as much as it was before.
Well, speaking of the Fed, the new Fed chair, Janet Yellen, will be speaking in front of Congress on Thursday. What do you expect her to say? Is she going to be on message, or are we going to hear something new from her?
We're really expecting that she's going to be charmingly boring, which will probably be a good thing for this market. Really what we're expecting is at most there'll be a little bit of a tweak, maybe to put in some sort of wording around some sort of an inflation floor, meaning that they won't let things slow down too much. But beyond that, she should be on message, and we expect that things will just continue going forward the way they have.
We've seen a pickup in mergers activity lately. A lot of deals been announced in the last couple of weeks. There are a lot of deals brewing right now. Do you consider that a positive? And would you invest with that in mind right now?
Well, it is a positive, Bill, and it's one of the things that we saw actually starting last year. If you look at the second half of 2013, there were more deals in the second half than there were in the first, and now we're starting to get a little bit more traction with that. We think there's a couple of things going on there. One is that we need revenue growth in some of our major corporations. We've had huge earnings growth in the past 5 years, about 118%, but we've only had 7% revenue growth. And so given that, they're going to be looking for different ways to get that revenue growth. We're looking more for organic growth and to buy the growth. And so that's going to actually be a support under some of the smaller and mid-cap companies. And it's something that we are absolutely taking into consideration.
Patty, in 30 seconds, tell us about the Ukraine and what investors should do, if anything, about their portfolios.
The Ukraine situation is probably not going to affect your portfolio in the short run. The big issue here is going to be something like a contagion. We don't think that that's coming. In fact, we think that there's going to be help from both Russia and the EU offered. We know that the U.S. has already stepped in. And so we think that it'll probably get itself solved. And you have to invest over the long run using the fundamentals. Okay. And this is just a small thing.
All right, lots of good information. Thank you so much, Patty. Patricia Edwards, Managing Director of Investments at U.S. Bank Wealth Management.